Good morning, everyone. Welcome back to my channel. I am King Bash. It has been a long time I've posted in this channel. I've been busy working on some things. I have many planned goals for this year, so I'll be dropping videos on price action, top-down analysis, different episodes. I'll be doing breakdowns on market structure, price action using the ICT model. So follow me. I will be dropping knowledgeable videos back to back every day. So this is one of my goals for this February. And by the way, happy new year to you all, my subscribers, my followers, those that have been on this channel from the beginning, and those that are seeing this video for the first time. Happy new month to you all. Subscribe and like the video. So today we are going to do a breakdown from weekly time frame down to the 1 minute entry time frame on EURUSD. So this could have been an opportunity for some of you to have capitalized on last week Friday. So I want to use this opportunity because I know this is a challenge for some people. So we are going to do a breakdown, and I'll be doing this every single day. Alright, so without wasting much of the time, so let's get started. So this is a weekly time frame. This is EURUSD weekly time frame. So you can see from here, you can see that price is making lower highs and lower lows, lower highs, then higher lows here. From here, price push up and make a higher high, came back to make a higher low, also make a higher high. From here, the trend is going up. Then from this point, what do we see? We see a massive break to the downside. Price broke down to give us a lower low and a lower high, then a lower low, a lower high, a lower low, a lower high. So from this point, we are anticipating that the next week, that is last week, should be bearish because price has already made a lower low. Price has retraced to give us a lower high. So we expect the next candle to be bearish for last week. So this is it from the weekly time frame. We are looking for what sells. The trend is what? A downtrend. Now let's go to the daily time frame. Now on the daily time frame, what do you see? You can also see that price is making what? Lower highs and lower lows, the same price action. We told you that price is fractal, it repeats itself. So you can see price came here, create a high, and price swept this high. And also you also know that price attacks liquidity, which is very important in the market. So here price makes the high here and price swept the high. After sweeping the high, price broke down. Now you can see that this is the low price make here, this is the low here. Good. Price make this low here down. After making this high, price came back and made this low. Now this is your range from this high to this low where price broke is your range. All these are internal market structure. So this is where the main break of the structure occurred here. So this is the break of structure. All here you can look for sell within this region. If price come to this region, any point of interest here can be an area for you to be looking for your sell on the daily time frame. So this is the main break of structure, but these are internal lower high and lower lows. These are internal structures. So now what happened? After price make this low, it came back, make a high, make a low again, then price made a big retracement to this point. You can see there is an imbalance here that price did not fill. There is an imbalance here, price did not fill this imbalance here. I'm coming here. You can see this is an imbalance here, and above that imbalance also there is what? A supply zone. That is a supply zone. This is an imbalance here. Price came here to fill this imbalance and to tap this supply zone. So immediately price reached this supply zone, it rejected this zone. You can see on the daily time frame. So supply is an area where there is aggressive sales from my previous videos. So when price reach this point, we expect price to be selling. And what happened? Price rejected for 2 days. Then the next day we have this big bearish engulfing candle. That's for the third candle, which represents the third day. You can see price made an aggressive bearish candle to the downside, showing you that the momentum sellers are now in the market. So if you are a long-time trader, a swing trader, you can take your entry here, and by now you should be in deep profit. Now, but we are scalpers. We use the smaller time frame. I'm breaking this down to the 1 minute time frame. So now after seeing this candle, the next candle, we also got a red candle. The third candle came back and filled this imbalance here. You can see this candle and this candle did not tap. This next candle, before it closed red, it came back, filled this imbalance here, then it closed with strong pin bar. Now this is showing aggressive selling here. So now the last day on Friday, from seeing this candle and seeing all this explanation, number one, price is in the downtrend from the weekly. Also from the daily, price is in the supply zone. Price rejected with series of red candle. Price made a strong bearish pin bar of the previous day. So you should be anticipating price to sell down, to continue selling down to this low. This will be your final target here. This is your final target here. So but you can take some profit around this region. You can see there's an imbalance here. So this should be your target for Friday. Now let's go to 4 hour. Now on the 4 hour time frame, what do you see? You can see price was making higher highs here. Price was making higher high, higher lows, higher high, higher lows, higher high, higher lows, higher high. Then price came here and broke this low here. Price broke this low here to give us a lower low. Change of character. You see, this is what we call a change of character. Price broke this point, and after price broke this point, what did you see? You see price made a huge imbalance from this candle here. You can see from this candle to this candle did not touch. So this is a very big imbalance here. So what happened? Let's plot the imbalance, and you should see. You see, this is a strong area where price will come and fail. Then you look for your sell. You see, then what happened? Price, after making this imbalance, price keep on going down and created liquidity. These 2 points here, these are areas of liquidity, and above that area we have an imbalance. So each time price is coming back to this place, this is an area for you to sell down. So what happened? Immediately price came here, price sold down. You see, so now price, now this is an area. Now let's go to the 1 hour time frame. Let's go to the 1 hour time frame. Now on the 1 hour time frame, what do we see? You can see price is coming down, making lower highs, lower lows, lower high, lower lows. Then here, what did you observe here? Price, there is an area of liquidity here. You see, before price will go down, price has to come and attack the buy side liquidity before it goes for the sell side. If price is selling, it attacks the buy side liquidity. It takes order here on the buy side above here, then goes down to attack the liquidity here below. This is an Asian range liquidity here. It is an Asian range liquidity. There are indicators for Asian range. So you can see, so this price took this as a liquidity. So after price came here, fill this place on a Friday London session. After price take this high, this Asian high here, price went to attack the Asian low. You can see this could be an area for you to capitalize on. You see, then also above it there is this supply zone. in which we know that price can come and fill this imbalance here, tap this supply and still reject it. You can see here, let's mark it. You see, this is a supply zone. So these are areas where we are expecting what price to come. After sweeping this high, you can look to short down to this Asian range, or if you miss this entry, you wait for price to come back again. For you to sell, always wait for price to take out a high, then before you look to what sell down. So after taking this high, there is also a supply zone here. There is an imbalance here, so this is a strong area. So after seeing this closure on the 1 hour, after this candle close, then you can look to sell down to attack the opposing liquidity down below here. You can see there's a liquidity below here. So after taking that high, price down. So now let's go to the 15-minute time frame. Now you can see on the 15-minute time frame, what do you see? This is that range, this is the Asian high, and this is the low. So you can see price was making lower high as if price is going down. Price created liquidity here. These are series of liquidity here. These are all trap for those people that are using trend line. They will see this as an area for them to keep on selling. So what would price do? Price will come and take them out. After taking them out, you see, after price takes them out, from this point, after the sweep of this high, this is where you go to your entry time frame and look to short down to attack the opposing liquidity. Then likewise, if you miss this setup, there is also another setup for you. You see here again, immediately price reach this place and closed, then you can look to sell down. So if you miss this one down here, you can also capitalize on this bigger move here. So that is it. So now let's go to our entry time frame. You go to 5-minute time frame. Now on the 5-minute time frame, you can see what happened. There is no on the 5-minute time frame here for those people that are only take their entry on the 5-minute time frame. So after this drop, you can see an imbalance. After price fill this imbalance here, this is where you can now take your entry to short it down. You can see short it what down. Now like me, I normally take my entry on the 1-minute time frame. So on the 1-minute time frame, look at what happened here. You can see the same thing occurred here. Price was making what higher highs, higher lows, higher high, higher lows, higher highs, higher lows, higher high, higher lows, lower highs, lower lows. So from this point here, you see there is a break, change of character here. There is a change of character here. So after this change of character, what do? You look for an imbalance. You see price printed an imbalance around this region. This is a 1-minute time frame. Around this region, there is an imbalance here. So when price retreats back, so when price break the structure, make a lower low, comes back to this imbalance here, this is where you are taking your what trade. You place your what entry here. You can place your trade around this level. You place your trade around this level. Your stop loss should be above the structure here. So you place your entry here. Your stop loss should be here. Your entry should be here. And can you see the move from here? You can see the move down. This is the opposing liquidity. From here, you'll be able to get 1 to 4 risks to reward. Now, this is how to break your chart from the higher time frame to what the lower time frame. Also, you can see this is the other entry. If you miss that first one, this is also another opportunity for you. You can see from this point here. From this point, what do we see? After this low, price came here, made an equal low here. From here, we can see there is a break of structure here again. You see, there is a break of structure here. So after this break of structure, what do you see? You see also an imbalance here. there is what, an imbalance here. So where you see this imbalance, when price is traced down here, this is where you enter, you place your stop loss here, and you target what, the extreme low. You can see you target down. Look at the move. So if you find value in this video, like, subscribe and follow. Once again, I'm King Bash. Thank you for listening till the end. I'll be dropping more videos coming soon. Bye.